What's good, ladies and gentlemen? Thank you for tuning in. Nelly here, and today's topic, we're going to be going over technical analysis, okay? Basically, like understanding what candlestick patterns are and things like that, and like what the charts are all about, okay? And how important, technical analysis is to a trader. So, technical analysis is basically the markups of the charts, right? How you draw your charts, how you draw trend lines or anything like that. But the whole point about the technical analysis, right? The understanding or even candlestick patterns, right? I'll touch in on that right now. The explanation of like candlestick charts and their significance, and the best term that I can say is that your candlestick chart, right? Like, for example, there's a few of them that are primarily used. One is a line chart, which you usually see like on news channels and things like that. Another one is like Japanese candlesticks. That's what typically everyone uses, right? We use the Japanese candlesticks where they're like green and red, rectangles with little, spikes, and or they're called shadows, but also wicks at the top or bottom, things like that. And then the other one is a high low close, open high low close candles, which back in the 90s they used to use them a lot, but then Japanese candlesticks kind of just ruled everything now. So that's what that's basically going down to. So the significance of those candlesticks is to be able to tell you data within those candlesticks, but it's also in line with the time frame. So each candlestick, right, going off with like the commonly used one, which is the Japanese candlestick, each candlestick is usually whatever the time frame you're on. So for example, if you're on a daily chart, right, a daily chart, 24-hour chart, right, well, it'll be 1,440 minutes, but because it usually goes by minutes. So you have 1 day's worth of data within that one candle. And as you go down to the 4-hour chart, then you have 240 minutes, right? And then that's what you do. That's what you do for the 4-hour chart. You basically look at all of the chart patterns within that candlestick that's 4 hours. So usually a 4-hour candle in a daily chart, in a daily candle, that's about 6 candles altogether, right? So the common candlestick patterns that are usually used when trading are usually in the form of like a doji, a hammer, or the famous engulfing candle. Like that's it. So the engulfing candle primarily is used for like to spot entries, or even a doji and a hammer. They're also used just primarily for entry signals, right? Or to tell if there's some sort of exhaustion or like rejection at a certain level, to where you might look for an indication to start heading down to lower time frames to then get your entries on those lower time frames. And then there you might also still find a candlestick pattern, right? That's it. So those are the types of like technical analysis that you will need in conjunction with just using those candlesticks, right? So other things that may help you with those candlesticks, with the candlestick patterns, is also just utilizing like the data within them. So understanding how they move, what the behavior of that one candlestick is, what happened within that one candlestick. So if you have like, let's say a 1 hour, one daily time frame candle, then you want to see like what happened within that candle. So sometimes, like for exercise, I'll have them mark up the low and the high of the candle, and then I'll tell them, okay, so mark up where this is the beginning of the day, this is the ending of the day, what happened within the whole day, like on a lower time frame, what happened that it went in that direction and such and such. So you want to go ahead and do all of that and then just make sure that you mark up everything to that from the open to the close. And then that right there is going to be able to tell you everything you need to do with those kind of candlesticks. You know what I'm saying? So everything like that is how you interpret the candlestick patterns, like to make trading decisions. Because like in one whole candle, you have to see how it's moving, why it moved that way, what was the cause of it, did it come off of a level that it was respected, things like that, you know. So in a real world example, the candlestick patterns are heavily used for confirmation if a zone is being respected or broken, confirmation for entry, to make sure that you gotta wait for those candle closures to then get the confirmed signal to your entry. Because a lot of times, one thing that I see when traders actually are doing technical analysis is that they'll see a candle forming, and because they feel like it's gonna like close very, like, let's say the market's bearish and it's closing very bearish, that they want to just hop in before it closes. Right? So let's say you're on like a 15-minute candle time frame, right? If you're on a 15-minute time frame and that candle has, let's say, 2 minutes left to close, right? So that means that so far that candle went from opening to where it's existing now, 13 minutes running, and it needs 2 more minutes to close at that 15-minute candle mark. Then you got to wait those 15 minutes. If you don't wait those 15 minutes, you're going to end up putting yourself in a disadvantage, because in those 2 minutes, who's to know if the market is going to end up just going right back up and then closing out in a different area where you don't want it to be, and then it gives you a wrong signal. Now you entered and now you're in drawdown, and now you're like, damn, I should have waited, because now like my signal is invalidated, this, that, and the third. So you want to make sure that you're always tapping into that, always tapping into that, because that's like the primary example for why candlestick analysis is very, very important. If you don't utilize your candlestick patterns, you're gonna end up being at disadvantage, because it's very important for you to be able to do that. Now, that's just the candlestick parts of it, okay? But understanding like technical analysis, and not so much as full in depth, because I want to try to keep these videos around a 10-minute mark, but sometimes when it's a juicy topic, you just go off. But but with that being said, technical analysis is very, very based on preference. I mean, it depends on like what kind of trader you inspire to be. Maybe you're a technical trader that's based all around retail. Maybe you're a technical trader that's based around institutional level charting. It's all preference based. In this industry, it's very important that you understand like what style you best fit in, because if you might bounce around, and that's okay too. You might bounce around, and that's okay. What you don't want to do is be stagnant in a period where you're just like, oh man, I don't know if I should do this or do that, or try a little bit of everything and get your feet wet, and then make sure that when you see what you're good at and you notice it, dial into that, because that's right there. That's where you're gonna understand. Okay, cool. I do better when I mark up like my technical analysis with like if I use trend lines, or if I use candlestick patterns and things like that, or support, resistance, market stuff, things like that. You start to understand where your supply and demand, not supply and demand, even supply and demand too can help along with support and resistance. But like you start to see where your technical analysis best fits in, and then you start to see that over the course of the time that you're trading, you start to realize, okay, this works better than this. I'm great at spotting this, blah, 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 blah. And then slowly but surely, you start to realize that this is what you need to get better at the technical analysis. And this is not included fundamental analysis. We'll cover that later. But this is just basically going over just understanding what helps. You know what I mean? And you can't really use technical analysis if you don't understand what candlestick patterns are. So you need to understand what candlestick patterns are, how they move, how they're created, how they form, how they behave, things like that, because you need to understand that in full in depth. If not, then you're gonna not really know where you are within the market if you don't understand what these candles mean. You got to break them down. But with that being said, again, I want to try to keep this short and sweet, but also with a lot of nuggets and a lot of value. So this is the podcast episode on the technical analysis. Again, my name is Nelly. Please don't forget to like, comment, subscribe down below. And if you have any questions, again, leave them down below in the comments, or feel free to hit me up. All right, peace. I have my socials and everything, my social media tags and handles in the description below. Peace. Have a good one.